Hi everyone, welcome to episode 2 of Avoiding the Biggest Investment Mistakes. Today I'm going to discuss why trying to time the market is a big mistake. You see, the issue with trying to time the market is that you have to make two correct decisions, when to sell and when to buy back in. Now everyone's familiar with the investing principle, buying low, selling high, but it's a lot easier said than done. It can be very difficult to know when a market is peaking versus when it's bottoming out. Very few investors find success over the short term, but none can find success over the long term. Thing is though, people fall into that trap, costing themselves thousands, even tens of thousands of dollars that they really could have put towards their retirement. To illustrate how difficult it is to time the market, let's say you invested $10,000 in the S&P 500 on January 1st, 1998, and you left that money in the market for 20 years. Your average annual return would have been 7.2%. But let's say you missed 10 of the best days in the market over the course of 20 years. Your average annual return, 3.5%. Now that's less than half of what you would have had you stayed fully invested. Now let's say you missed 20 of the best days over the course of 20 years. You barely would have made more money than you originally put in. And that's not even factoring for inflation. Unfortunately, many investors' performance resembles this bar. Reason is investors get scared when there's volatility in the market and they sell, and they only get back in once they're confident the storm has passed. But the problem with that is that by the time investors get back in, they've already missed a lot of the rebound. So for those of you who might be thinking, wow, that's me, well, here's a fun fact you need to remember. 6 of the best 10 days in the market occurred within 2 weeks of the 10 worst days. It's said it's often darkest before dawn. The bottom line is that timing the market is virtually impossible to do consistently over the long term. A better approach is to have an investment plan that will really guide your decisions rather than impulsively selling your investments at the worst possible time. But I want to hear what you have to say. Have you ever missed out on one of the market's best days? And if you have, please let us know in the comments below. And in our next video, I'll share with you another big investing mistake, taking too much risk. So if you liked this video, please subscribe to our channel so that you can receive more investing tips. Thank you for watching.